How's it going? Welcome back. This is Jonathan, and in this video you'll know that I'm in a different location. Now unfortunately I have been locked out of my house due to an evacuation that went on in that location, so I'm currently doing this in a hotel, so things are going to be a little bit different for here. But with that aside, let's go straight into the charts and let's take a look at the current Bitcoin market action and see where we're heading from here on out. Let's go ahead. So I'm going to bring up the Bitcoin chart right now, and what we're going to take a look at is the current projection for this market. Now the reason why I want to take a look at the projections is because there's two schools of thoughts right now. One school of thought is going higher, one school of thought is potentially going lower. I wanted to bring it all together and give you my opinion, and then we'll see what happens at the end of the day. So obviously the first school of thought is Bitcoin bull run is going to continue, and it's going to continue without any specific delay. And then we have the second school of thought, who are actually putting out two individual forecasts. So the first forecast is around 44,000, and the second forecast, I think someone's putting out around 33,000 that they think the market's going to come down to before the next run higher. So that's the objective of this video today. We're going to take a look at those two price projections and see what the likely outcome of those are. But as always, we'll do a quick update on the markets and then we'll go from there. Let's get to it. So we know where we are at the moment. We can definitely see right here the market is currently in its forecasted bullish stage before it starts to move over into its pullback slash slowdown phase before potentially another boom higher. Now, just wanted to reiterate that these forecasts that you're seeing here have only been produced by myself. I believe I'm the only one in the whole world who has produced a forecast that looks exactly like this. So I'm more than happy for people to use them, more than happy for people to share them, but just, you know, bring people back to me, because it's just a sign of respect for the content. So I don't want like other YouTubers going out there and just blatantly stealing this content and using it so that they can monetize it on their YouTube and get their ads, etc. So always, you know, respect people who you get information from and go from there. So always pay a tribute to the people that you get this information from. So that's just what I wanted to start off now. I'm giving this information for free. We usually don't share this publicly. There's good reasons for that. So just to go back to it, the market has made a strong rally higher and is now in what would appear to be, in some people's instances, is due for a pullback. Now, there is every chance that we could get a higher low forming around here. There's a potential that we could get a higher low above the low that occurred previously, which is over here, before we get another final push higher before our decline. And I'll go into potential reasons as to why that might be a scenario to watch play out. But with that said, we're still on the upwards trajectory overall. And in saying that, we are coming up to the time period where we need to be watching for a change in trend soon. So we've got an update on the mass pressure chart and where we are now. Let's go straight over. I want to go straight over to the 90-day Bitcoin cycle so we can take a look at this. So I'm now going to hide. So I want to just hide this one. Let me bring this out. Gosh. I want to hide this one, so let me hide that. And then where's the other one? So we got that cycle playing out and this cycle playing out. Okay. So now that the other cycle's finished, let's go ahead. So what we were watching for is a potential left translation high or a right translation high to give us an indication of where the market may be heading. Now, the whole theory was if we get a right translation high and then we get a low into our cycle endpoints, then that would give us greater clarity that the high in that time period, or the high in that area, in that location, is going to be a higher high. Okay, so that's what we're waiting for. So we're waiting for confirmation that the market's going to make a top on the right hand side of this specific one right here. That way, once it comes down in price, if it does, the low in this instance is going to be higher than the low that occurred over here. Okay, so it's going to be a rising low, or a higher low that they call it. And then we've also got another instance here where we have a midpoint from this low to a potential cycle ending point over here. Now, from this location, we are wanting to know, are we going to get a right or a left translation top? And if that is going to be the case, if we're going to get a right translation top, then we'd be looking for a higher low. So we're essentially just merging these two into one. So we have a low here, we have a low here, and we're looking to see where the tops are going to be, and if we're going to get sort of like a rally like this. Let me draw it again. So let me go ahead and get rid of this tool. I'm going to grab my poly. Let's go poly. So what we could be looking at, if I just do like some just completely fictional hypothesis here, we could look at the market going up. Let's just use this top as an example. Actually, I'll pull it out to the right hand side. We could look at it doing this, something like that. So that there would be a right translation top. So any of these tops here, we could be a right translation top. And then we're looking at the next point in this instance. We're looking for the low. So we want to know where the low is going to come. So we're looking for a low in this area here. And then once we got the low in this area down here, we want to start looking for the top that's going to occur in this area here, because the next low is going to occur in this area here. Now I know that's a little confusing. This is the whole wheels within wheels, cycles within cycles phenomenon. But I guess in an ideal world, let me go ahead and get rid of the drawings. In an ideal world, if the market was going to push higher, this is kind of what we're looking at. So let me go ahead and just zoom that out. So we've had a right translation top, market's fallen lower, and we've had another right translation top, market's fallen lower. But each time, as you can see, the lows are getting higher as we fall into our cycle endpoints. Now, if you don't remember what the left translation top was, if the left translation top ever did occur, let's say for example, if we move this one back here, which we know now is fictional, and then we get this one, and then we had a left translation top. It's not going to work. You can't get a left translation top, so I can't show you. But effectively, what that would mean was that there's a very high chance that the next cycle low is going to be lower than where it started, which means that we would be looking for prices to decline below this point here. So already we know that's very unlikely. All right, so that's just the update, and I definitely overcomplicated that one, but just try to make a point. Let's go ahead and take a look at the Elliott wave. We're still trending up for that. Let's keep in mind that we have a potential reversal around 15th of the 9th. So we'll see what happens in that point. And then the next reversal point is around, what's that? November, December, around 11th of November. 11th, 12th, well, I can't see. Yeah, 11th of November. So we look at that. We're looking at now the 15th of September and then the 11th of November for potential market reversals of any sort. Okay, so that's what we're going to stick with. All right, let's go back. Now let's go over to price. So we had our two congestion areas. And now what I want to do is I want to take a look at the hypothesis that some people are putting together that we could be falling lower into, let's go ahead and draw it in, into the 44,000 range, which would put us around here, and then the 33,000 range, which would put us around here. So that is what some people are putting at now as the likely scenario for this market moving forward. Let's see if we can confirm or deny this analysis. All we're going to do is we're going to chuck on a bunch of price retracements, and we're going to try and find where price clustering occurs and where locations in price are converging. Okay. So already we've got some price clustering occurring. So I'm just going to mark it on with my rectangle. So right here around the 39,000. Now what I'm doing here is I'm marking on areas if the market should fall to it. I'll mark it a different color actually. That we'd be on the lookout for potential buy areas because we're looking to buy into the next rally. Okay. Now don't follow anything I say. I'm just showing you how to use the tools. Okay. This is not actually what you would personally do. So there's no advice here, but this is how you would think and use the tools when you're looking at the market. Then we're looking for another price clustering location. I believe if I can get this right, we have a price cluster right here where we've got a range and then we've got another clustering happening. I'm going to go ahead and chuck on another price retracement on a different range. just to see. There we go, we got a direct cluster on 2 areas. And again, not many people out there are using this whole price clustering form of analysis because it is not readily known by a lot of traders and all their understanding of how to actually apply it, what to look for. So please just use it as a form of your research and analysis, and don't actually trade with it unless you've played around with it and you can confirm that it is a style of trading that you want to add to your arsenal. Okay, so what we have here is we've got a price cluster around 45,000, we've got a price cluster around 42,000, and then we've got a price cluster around 40,000. So I'm going to go ahead and write those down because I want to see in the next chart where we might be getting more price clustering. So I believe the first one was around 44,000. Second one was 42. Let's just go 42,000. And then the last one was around the 40,000 mark. Okay, so that's all being jotted down now. Now I'm not going to talk about anything relating to patterns at the moment. Let's take a look at some other ones here. So the Gantt swing, the daily Gantt swing's pointing down, so it's signaling potential market reversal. So we've had a swing breakdown, which is a sell signal on the daily. Now this occurred over here too, where we had a breakdown and a sell signal, but as you can see, it later reversed. But in some instances, when we get the swings down, it can keep going. So we take it with a grain of salt, but we keep it in mind that one of our swings has changed, and we just go from there. Okay, so it has reversed. Regarding the Kagi chart, we're still in buy territory, so until it crosses this low here, we haven't got a sell signal on that. All right, I'm just going to switch over right now straight to the squares. Okay, so what I want to do now is I want to put on our 45-degree line, and I want to see where exactly we are looking for potential market reversals and where it could fall to, because I want to try to build the whole picture here. So in the theory of keeping it simple, I'm just going to give you a quick update on the square of 9. So first of all, the forecast was that if the market came down, it's going to sit on this level here and or drop to this level here. What we can see at the moment based on this chart is that the market came through the level, and then if we zoom in there, we can actually see that it closed on the level. We can go in and we can see that it closed on level, and then it's opened on the level, tried to push down more, and now it's moving above it. So anything that happens regarding the closing and the opening on a level is considered a hit of the level. Okay, sometimes we just need to ignore the actual highs and lows. It's perfect and it's good when it actually hits, but when we're trying to build the case of what's happening right now in front of us, we need to use all the information that's available to us. So as you can see, this level here, that was a bad line, this one right here, as you can see, we had the opens and closes coming up to it. Okay, but sure, you could say that it breached above it, but then it came down straight away, respect the level, and reversed. So we're just applying that same theory of level respecting, and we're hitting the 220-degree level, which is one that we're watching, and we're suggesting that it's now respecting it. But let's say, for example, that the market does fall like these other guys are suggesting. Where could it stop? One of them was the 44,000 level, and the other one was 33,000. I didn't see any reason for it to come down 33,000, or at least do it in a way that would be supportive of any major price moves. But let's just say, for example, the market did come down to the 44,000 level. What would that mean and what would that look like? So 44,000 puts us in, let me see if I can get horizontal line. 44,000 is right here on this square of 9 of 220 degrees, so I don't even need to put that one on. And then we have 42,000. 42,000 is right here, which is, oh golly gosh, sensitive mouse, which is 42, about 0.9% from the next level below, which is the 220 degree. Then we got the 40,000 mark, which is pretty much sitting on a 45-degree angle. So we got this one here. We have around this one here, and then we have this one here. Was that right? Let me just double check. 44, 42-ish, yes, and 40. Perfect. So if the market is to fall, I do agree that if it's going to come down to a certain level and then potentially reverse, we got a lot of price clustering at the 44,000 mark with also a 220 degree, and you could also go even further and say natural support and resistance of the past, if that's what you want to use, and not the 220 degree level. At that level, so if it was going to come down there and it did merge into some time forecasts that were put out, etc., I would say that if the market reverses, that could be a good location to look at buying, supportive of if your theories and analysis will combine and match together and give you a buy signal. If it was to keep falling, let's say, for example, it did crack through that, well, then the next level of support based on the 220 degree lining up with other price clustering would be around the 42,000 mark and then down to the 40. Now, if I zoom out, clear this away, if I zoom out, we don't, so 42, we don't have any clear natural resistance around these levels. Possibly this high here could act as some support around here, but there's nothing recent, so we'll just leave that as is. So yeah, if $44,000 for Bitcoin in USD terms is going to be on the cards, and that's where it's going to come to, I would suggest that definitely that's one to watch, especially if it moves up in time. But that's saying if it does get there, okay? So Bitcoin could respect this 220 degree level here around the 47,000 mark, 46, 45, sorry, if it comes down to the 45 degree angle. But there and there, it could reverse now and just start heading higher. So the next time count that we're watching for right now is going to be, let me go ahead and get my rectangle, is going to be the 28th. Okay, the 28th is running on a weekend. So that means we're looking at the 27th, which is today, and also going out to the 30th. So I did make a comment the other day on one of the posts that I put out that we could be getting a, how to say simply, we could be getting a midpoint reversal on a time count, which just means that we've got two time counts that are expiring. The first one was around the 25th and the second one was around the 28th. We're getting two time counts that are expiring and they're joining up together. So we'll see what happens on the 30th to the first of the month, the new month, to see. But it could be a point in case where we're getting sort of a midpoint reversal between the two dates and the market could move higher. We don't know just yet. I don't like calling these reversals on the day. I like to give it a little bit just so that we can get a clear picture on what's actually happening. But as we start to build the picture and you start to build, I guess, confirmation and also confidence, is probably the word I was actually looking for, confidence in this theory and methodology, then you can start to go, okay, so that's actually how the market moved and that's how I should, interpret price action at that point in time. So I just wanted to give you an update on that, just to provide my side of the story, at least on what I'm potentially looking at and what I'm thinking. Go ahead and follow whoever you want. This is just my side of the story. And with that said, if you like this video, leave it a thumbs up. If you learned anything, go ahead and leave it in the comment box. And if you want to stick around, hit the subscribe button. I'll talk to you soon.